The CPI report came in and everybody's celebrating. Oh, man. Inflation went down. What? The numbers came in and it says inflation rises just 0.1% in March. What? It says inflation rose. So why are people celebrating?
Awkward. So awkward.
This is confusing, right? We're gonna jump into why everyone's celebrating, saying,
oh wow, CPI is down.
And we see here that it actually went up. So let's just talk about what the actual numbers are, guys. The actual numbers for inflation, we have inflation down to 5%, but the core inflation went up 0.1%. It went up to 5.6%, but everyone's celebrating the 5% versus the core inflation. But here's the reason, and we're gonna get into it. There are reasons why inflation has dropped down to 5%. There are big reasons, and we're gonna talk about those reasons and why this report, even though headlines would make you believe in certain aspects that inflation is going down. And you know, if you watched my videos previously, you knew that I said that all you have to do is look at the mainstream media. The mainstream media and the people in that, hedge fund, banks, they're all trying to go for the pivot. They're all trying to make the Fed do the pivot because the pivot will save their business, allow them to make more money in a low demand situation. And that's what we're in right now. Demand is going down. I can actually see that. But that is because the Fed continues to raise rates. And with a pivot, demand will go back up. That's not what we want. Before we jump into it, my name is Orlando. Welcome to the channel, guys. Please hit that like and subscribe button. Also in the description, I have courses for real estate investing for beginners and a YouTube course. The coupon code is in the description, 50% off, guys. So why is it that everyone is celebrating? And what you will see is in the market, you will hear everybody say it. It's baked in. It's baked in. It's baked in. Huh? And what does that mean? What does that mean to you? That is basically market talk for,
hey guys, you know, we're not gonna be to bad news. It's already there. We already expected inflation, core inflation to go up. We already expected this to happen.
And if you really think about it, how many times have you heard that it's baked in, it's baked in, it's baked in, so that the market doesn't move? And on the only time that you really see the market move in a down direction is if they get caught off guard. If something big happens that no one expected, like the banking issue, right? That wasn't baked in. Even though some people will tell you, Orlando, we knew that was gonna happen. You know, it's so funny. The markets are supposed to be the market, right? You're supposed to react to what things that are happening. You're not supposed to have insider trading information. And it sounds like with everything being baked in, it sounds like a lot of these guys have information beforehand. Isn't that surprising? Inflation rises just 0.1% in March and 5% from a year ago as the Fed rate hikes take hold. We have a meeting in May and everybody wants, especially the bankers and hedge funds, they want the Fed to pivot, hold, pause. That's what they want. They want one of those two things, but they would really prefer him to cut rates. How drastic would that be? How drastic would it be if we had a Fed who said he's gonna try to get inflation down to 2%, and then he goes ahead and turns around and he says,
you know what? I feel all the pressure from these banks and them wanting to make money, and I'm just gonna do what they tell me to do, and I'm going to turn around and cut rates.
Demand would skyrocket, rates would drop, and prices of homes will continue to rise and rise and rise, right? That's what would happen. That's what we don't want. We want him to continue to fight inflation with his tool of raising rates, which will stop demand in the housing market, which will bring prices down on homes and make them affordable. That's what we want. And for some odd reason, he's not getting the memo. It says here, deflation cooled in March as the Federal Reserve interest rate increase showed more impact. The Consumer Price Index is a widely followed measure of cost of goods and services in the US. It rose by 1% from the month against the Dow Jones estimate of 0.2% and 5% from a year ago versus the estimated 5.1%. Everyone was saying, all the banks were saying that they believed there was going to be 5.1%, and it came in at 5. So it basically the same, right? It came in exactly, quote unquote, where they were. But here's the thing. Here is the part that I want you guys to really understand the reason why. Now, when you look at inflation, you see that it's down 5%. What are the reasons that inflation is going down? Why did it go down? Is it because of the Fed raising rates? Of course it is. Yes, that's what we expect. But if you look at the core CPI, excluding food and energy, the core CPI increased 0.4% and 5.6% on an annual basis. If you look at this chart, guys, you see that the chart, actually inflation went up, core inflation. And then the other inflation, when you include food and energy, it went down. But here's the thing. Here's the reason why it went down. One of the main reasons when you include food and energy, to be particular, we were using oil reserves to get oil down. Remember when Biden announced, guys, that we were going to use our oil reserves to bring prices down for gas because gas was so high? And that stuff started to kick in. And that's the reason why we're seeing that inflation drop, because prices were low because we were using our own oil reserves for gas. Not if we went back to getting oil from other countries and whatnot and not using our reserves. And now that we just got news, guys. Remember, we just got news from OPEC that OPEC production cuts draw U.S. concern. Why would that draw concern from the U.S.? Well, if they cut production, that means prices of oil will go back up. What does that mean for you? That means at the gas pump, prices will go back to that high dollar amount, because at one point gas prices were low because we were using our own reserves, making our own gasoline, right? So that makes sense, right? That makes sense why you would look at March and say, wow, energy went down. But it's really superficial because we normally don't use our own reserves. We get our oil from OPEC, from the Middle East and whatnot, from other countries. And now that we're back onto getting our oil from the Middle East and from other countries, now we're going to be back on a high energy cost, which in my opinion will push back up inflation. So right now I feel like it's kind of superficial because we're using oil reserves that we never, ever, ever normally use. We normally just get our oil and gasoline from other countries. Look at this, guys. When you take out food and energy, what happens to inflation? It went up. It went up, guys. And that should tell you exactly where we are. And to be honest with you, let's be real. This CPI report, is it the real number for inflation? No. It's not. Inflation is higher than this. I hate to bust your bubble, but inflation is higher than this, guys. It really is. But this is the report that everybody uses. But I'm telling you, it's higher than this. And so a lot of people are just wanting the Fed to go ahead and make that pivot. And that pivot it's detrimental. If he were to pivot, I promise you guys, I'm telling you, it would not be good for the housing market. It will not be good. Does he need to pivot? Not at all. Zero. No pivoting. He needs to continue to raise interest rates. And I want you to remember, the Fed is trying to get inflation down to 2%. We're at 5% right now. Core inflation is 5.6%. He's trying to get to 2%. We have a long, long, long way to go, guys.
Oh, geez. Okay.
We really do. And it says the data showed that while inflation is still well above where the Fed feels comfortable, at least it's showing continued signs of deceleration. Policymakers target inflation around 2% as a healthy, sustainable growth level. The 3.5% drop in energy costs. Now, I want you guys to look at that. 3.5% energy drop. That is what I'm talking about, of using our own reserves, and it becomes cheaper. So when you were at the gas pump and you were getting, the gas went back down to $2, $3 or whatever it was, right? Versus $6 where it was, or getting up to that $7, $8 in California. When prices dropped, that was just some magician accounting work. That was not what actually the norm that we would get. It was self-propped up. It was something that the government did to quote unquote give individuals relief. Now, the question is did you think that it was going to last forever? And of course, it won't last forever. We have to eventually go back to getting the oil and gasoline from where we normally get it from. And unfortunately, yesterday's price isn't today's price. And the prices of gas and oil have went up. OPEC has made a decision to cut production, which will push up gas prices, and we will see that. I promise you will see that at the gas pump. It may not hit until, later this month or next month, but it will eventually hit, and that number will show up on the CPI report. And that may be delayed too, but in my opinion, I see CPI numbers continuing to go up in that energy sector just because of that. Now, I want you to look at this. 0.6% increase in shelter costs was the smallest gain since November, but still resulted in price rising 8.2% on an annual basis. Shelter makes up 1/3 of the weighing of the CPI report and is being watched closely by the feds. Like I said, it's really simple, guys. It's really simple. I try not to make this so convoluted and have so much information that it confuses individual, but it's really this simple. The Fed has tools to get down inflation, and that one tool that it has is to raise interest rates. So what should the Fed do? It should raise interest rates.
Yeah, damn right.
It should raise rates so that inflation will go down. But right now, it seems like the Fed is trying to play chicken and trying to go for a soft landing. That soft landing is, I don't want to destroy the economy. I don't want the economy to go into a recession. I do not want people to point fingers at me and say, you caused this recession. That is what the Fed is trying to do. Also, the Fed is trying to keep its job. He wants to be, with the election coming up, he wants to be pushed on as the Fed for the next administration. But I'm sorry. I'm here to tell you, they're probably going to get pushed out, Fed. When a new election president or whatever happens, they're going to bring in their own people, and you probably won't be part of that. So he's trying to tiptoe all around that and trying to make sure that he makes everybody happy, from you to the banking and hedge funds and to political people, right? From politicians. He's trying to make all of those individuals happy, and he's trying to tote this line. Well, unfortunately, with him toting the line, he's going to send us into a recession regardless. At least the one by the government's definition, because we're already in one. But in his mind, he can prevent it. He can make everybody happy and solve all problems with each one of those groups. But have you guys ever heard of, you can't make everyone happy? That's what the Fed needs to understand. You can't make everyone happy, man. You can't. You won't be able to satisfy all of these groups, people's needs and wants. And what you need to do is focus on one singular thing. Like you just said, I want to bring down inflation. So if you want to bring down inflation, raise up interest rates, guys. So when May comes, will he raise up interest rates? Will he cut rates, or will he pause? I think, in my opinion, if he stays true to inflation, he will continue raising interest rates. Now, will it be by 0.5% or 75? No. He's going to stick to the 0.25, guys. He's going to ride the fence as long as he can until we get a CPI report that shows a 1% jump in inflation. And then when we see a 0.1%, hold up. I made a mistake here. Even though he's already said that. But anyway, guys, you won't get all of your information from this one video. I need you to watch this next video here, guys. It will help you understand the housing market, financial news, getting into your first rental property. And I promise you the information you get from that video will be gold, guys. I will see you the next one. Thanks.